To Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have our weekly strategy roundtable discussion where we talk about Tradespoon tools, current market conditions, support and resistance, what to expect going into elections, what to expect after the elections, go through different scenarios, virus, thank you, and make a decision where the opportunities in the market. For those of you who are new, welcome. If this is your first live event, please type in first. David, Denis, welcome. Not sure if this is your first live event or not. I only see the first name, but Eric, Dan, Jack, Kevin, T, Virus. I know you guys been here before. Thank you for participating. But the difference between Tradespoon and maybe other services that are out there is that my background is technology, right? I'm not a trader on the floor that was a market maker. That's kind of a lot of the services are geared around ex-market makers. My background is technology, right? I built technology for several companies that went public. Options Express is one of them. That's kind of where I learned about trading options and stock business. I've been part of many broker dealers here in Chicago as a consultant or investor, and started Tradespoon over 12 years ago, and was able to assemble a team of financial engineers that are taking all my experience and building models, especially lately with all the latest advances in neural networks. The financial modeling, financial engineering is it's an exponential growth of how much progress there has been done, 10 years even versus what it is now, right? It's a different ballgame, and AI is here to stay, so we're taking advantage of that. But not only do we provide signals, right? There are a lot of AI models out there, some better than some worse. It just depends on what data they're training and what the inference engine looks like. But somebody has to trade these signals. So this is where we also have a live trading room where you can participate. Good morning, Don. Where you can participate in live trading room as well. Disclosures are very important. Please read them. Trading involves risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I encourage you, if you're new to trading, go to optionscreening.com, look at the risk associated with trading stock or options. I'm not a financial advisor. I'm here to show you how I trade and discuss different plans. All right, I know some of you are in the trading room, but let's go over. The goal is to become successful trader, right? Make money part-time, full-time, right? For part-time income or full-time income. Become a disciplined trader, and confident trader. Those are the goals, right? You can't be successful trader if you're not disciplined or confident, right? And if you're disciplined, confident, then usually you make money, right? Because it's a repeatable process and you've done it that takes time. It takes repetition. There's no magic of finding your confidence or discipline overnight. It takes time, repetition, just like any skills you want to acquire. If you want to become a concerto pianist, or if you want to be a boxer, or if you want to be a painter, paint paintings, or learn how to paint, all of that takes time, right? So you have to be patient. You have to invest into education. It takes time, right? And that's what we provide here at Tradespoon. So I encourage you to come up with the plan, treat it as a business, set weekly goals, monthly, annual goals. If you're new to trading, I would just try to beat S&P. That would be my goal. Everybody wants to make, triple-digit returns, and so do I. It's not going to happen the first day, right? It might happen the first day. It might happen even for a week or a couple months, but at some point, you will have, large drawdowns in your portfolio, and you want to avoid these large drawdowns in your portfolio because that's what takes away the confidence and discipline. So, very important to have a trading plan, right, and execute on that plan. Right, have a trading journal where you document all of your trades and you record them. Right. So let's take a look at the current market conditions. I know some of you were in the live trading room, some of them were not, but let's review. So earnings seasons what are the events this week? CPI, PPI data, right? CPI and PPI data would be like #1 event that I would review, consider. You know, a little bit hotter, a little bit colder. You know, there's data for on the both sides of the aisle, but market is heading higher. We just started earnings season. Wells Fargo continues to trade higher at 61.60. We have breaking out, we have JP Morgan consolidating, continues to go higher. So market continues to, the beginning of the earnings season looks good, right? You have JP Morgan, you have Wells Fargo, basically beating on the bottom line, or better than expected. You have Bank of New York up 1.5%. Let's look at so we had the Bank of New York, BlackRock Group. Let's look at the BlackRock Group. So investment banking are doing. Let's see, BlackRock Group is up too. Right, so investment banking continues to go higher. Banks, JP Morgan, Wells Fargo continues to go higher. So that's positive reaction to the news. And we have Progressive insurance company consolidating. Right, we have these natural disasters. You know, my prayers and thoughts going out to everyone who's been affected by the hurricane. So Progressive for now consolidating, not a big event, flat. And the best to know, this is distributors, industrial, up 6%. Right, these are also a good proxy for state of economy is up 6%. So first day earnings have been positive, continues to go higher. All positive surprises. So that's earnings season. Then we have, in addition to earnings season, we had a lot of Fed speakers basically talking about state of the economy, interest rates, cutting interest rates, 50 basis points, 25 basis points, no basis points, but everybody expects that they will continue to cut interest rate, maybe not as aggressive as we anticipated earlier, right? Because better than expected unemployment data, CPI and PPI going in the right direction, so yields are back up. Right, because now Fed doesn't have to cut the rates as aggressively, which as long as the rates are stable and dollar is stable and trading in this range, even though both of them are in downtrend, it's a good recipe for bullish, momentum in the market. Especially if they have advice. Kevin, I would disagree about the programming. I mean, I'm a programmer, I work with programmers. AI is going to change the world of programming, and it's already changing. We don't need as many programmers. Actually, I think last unemployment number, the biggest uptick in unemployment is actually in IT jobs, like over 6%. So I would not underestimate the AI and how much optimization or process improvements it can make in a world of content generation or programming. But everybody have different opinions. So tool that looks like it's not updated. 10.11. See the no bill of stock forecast toolbox. Let's see. Could be a caching issue. 10.11. But thank you for reporting me. Let's look. 10.11. You're right, it did not. Okay, I will look into it. Thank you for reporting it. Bill, thank you for reporting this. I will make sure that it gets addressed today. Okay, so don't forget. Okay. Is it maybe spiders? Let's see. Apple. Oh, Apple. Oh no, it's just a flip-flop. October 10, October 11. That's interesting. And October 10 should be gone, right? October 11. Okay, no, you're right. October 10 should be gone. Okay, I will take a look at that. Okay, so we do have tools, right? So we talked about macroeconomic data. Let's look at some of the tools. Spiders, right? It still shows a negative trend, although it's missing one data point. So I have to review it, but not much has changed. Market is overbought. You have 574 is your support, 580 is overhead resistance. We're right at the 580 level. Market is overbought, and everybody says, well, when is it going to pull back? Well, I guess most people are kind of wrong. It looks like it's breaking out again, and now we're at 580 levels. So market continues to go higher. You have kind of a ascending 50-day moving average, and markets are continuing to go higher on earnings. Thank you, Bill. Yeah, I'm aware of Elon Musk and Altman fallout. Thank you, Kevin. All right, anyway, let me try to get back. Okay, so what tools that we offer at Tradespoon? We have Stack Forecast Toolbox, right? You can enter any stack or ETF and find short term if it's overbought, oversold. You can zoom out to 6 months and basically see if the stock market is overbought or oversold, right? So for 6 months, it's still bullish momentum, even though it's deteriorating. The momentum is deteriorating, but nonetheless bullish market trend, potentially reaching 600 level, right? And we looked at the estimated move analysis for spiders. If you look at the spiders expected move, right, going into going to November 600 level, and then going to February, reaching 616 level. Right? Any questions on spiders? So expected move end of the year, November is 600 level, and November 29 is 600 level, right? November 29, 595, on the downside 550. So somewhere between 600 and 550 by the end of the year, right? So let's go over these scenarios, right? Those are the estimated move, distribution of different outcomes. One is, 600, right? By November or December, end of November, end of December, right? We're already in the middle of October. The other one is 540, right? 540. It's a pretty wide range. In terms of positioning, you do see a lot of positioning. Now this breakout levels in 50-day moving average is your main support. So we have three scenarios, right? One, we're heading into 600, right? The second scenario, we are trading in the range somewhere between, current level 580 and 560, 550 maybe, right? Scenario number two. And scenario number three, we get to 200-day moving average, right? Somewhere between 540. So based on the probabilities, those are all different outcomes that you can have. One is 600, one is we drop to 560, one is 540. So how many of you think we're gonna hit 600 this year, right? Or 6100, 610? How many of you think no, earnings is not gonna be as strong, or we have risk in Middle East, escalation in Middle East, or manufacturing data is slowing down, number of defaults, credit card defaults on the rise, and how many of you think we can, drop to, back to 560 level, 550, and 3, 200-day moving average. So 200-day moving average, we're stuck in the range. We're going to revisit 50-day moving average and stay there, or we're continue to make all-time highs, 1, 2, and 3. Going into, elections, we have, what, 3 weeks left, 4 weeks left for election. Next 4 weeks could be volatile, right? Could be volatile, but after that, are we heading to 600 or are we getting to 530? Find the chat box. Well, okay, David, we will hit 600. Thank you, David. Done too. All right, so we have 2s, we have 1s. Next 2 weeks we could get to 560. I think the 560 level will hold, right? I think 560 level hold, but I think we're going to hit probably most, either both extremes, but I think we will get to 600, right? We might have to stop at 560 before that. Earnings season is just starting, so it's hard to predict. So far it's been a good reaction from the banks, and usually, the banks are making money, and that's a good proxy for the economy, and that's a good proxy for what, industrials will report, what technology stocks will report. So I think the bias is to the upside. I recognize from the seasonality, usually October is volatile. It hasn't been, right? We're already into second week of October. So potentially, short-term pullbacks I think is in order, but I think we do go to 600 or 61, 610 by the end of the year. So those are, I think, is the core scenario, soft landing, right? The only thing that can derail this rally, either geopolitical risk escalation and, full-blown war in the Middle East, where other Arab countries are involved, right? Or hopefully that's not going to happen. I'm going to pray for that. Or you have a pullback, right? You have maybe the odds of recessions are increasing, right? So far they've been decreasing, but maybe at some point the odds of a recession will increase. Any questions? All right, so we talked about stock forecast toolbox, is where you can type in stock or option, look at the short-term or long-term trend, right? A lot of people ask, what is today's trend? It basically says today's trend is bullish, and then the range, right? This, long-term 6 months trend is kind of getting to a neutral, but still positive. Getting to a neutral, still positive. You can see support and resistance 550 by 581. That's what the model predicted, and we were at both scenarios. Right, so October, if we hit we're already at 581, or close. So model did a good job. This number was updated on the 1st of each month. Doing a good job predicting where the support and resistance levels. November, or end of October, we could get at 590. It's only 2% away. So that's long-term predictions, short-term predictions. You can look at the company screeners, right, to show you which, let's say, which sectors are leading the market, right? Banking is in strong uptrend. We see it today. Industrials, insurance is in very strong uptrend. So you can find which sectors are leading the market, and you can create a portfolio and manage your portfolio as well, right, to see support, resistance, the trend analysis. So that's stock forecast toolbox. Short-term signals, you can find them in Active Trader. Those are the signals that actually trade in a live trading room. In live trading room today, I closed the silver position, right? I was able to capture 2% on silver. Sorry, orders. So I closed the silver position today. These are the example of short-term and long-term signals that actually trade in a live trading room. So I trade silver, I trade stock or ETFs, and I actually closed Wells Fargo. Right, Wells Fargo is also looking for. This is an example of asymmetrical returns. Right, if you look at Wells Fargo, I put on a trade for 60 cents, right? Then I was able to close it for $1.05 overnight. And actually, if I was able to monitor this trade right now, let's see, it's actually probably getting close to $1.40. So right now it's trading at $1.40. So this is an example where you can make, potentially double-digit returns, right, in a short period of time. I was talking about barbell approach. I wouldn't put the entire portfolio into this strategy, but 5, 10, 20% of your portfolio, if you want to put in these aggressive strategies that could potentially yield double-digit returns, then that would be an example of that trade, right? Again, this is distribution of outcomes. We were looking at the live trading room. Probability. I did the same thing with JP Morgan, right? 225 in my personal account. Or what did I say? 217.5, 225 to 32.5, or 222. Here, 217 to 25, right? Let's see. Looking just probably 217.5 to 25.5. Middle strike. 225. 222.5. Back to 222. Okay. So 222.5, 217.5, 227.5 is, well, the prices have changed, right? This was a screenshot from yesterday, I think. Yeah, so it has changed now. But this was, again, same thing where you can have 3-to-1 or 4-to-1 risk versus reward when you structure these trades. All right, any questions on the Wells Fargo or Elite Circle? Right, so you have an example of both spread trades, example of stock trades, EWT, I trimmed EWT position, I trimmed my silver position. So Elite Circle allows you to participate live in the morning bell and closing bell. Watch the recordings if you're unable, if you don't have time to attend, and then you can watch the recordings and enter your phone number and get an SMS message and participate in trades with the SMS message. So that's Elite Circle, right? Active Trader, for today, we have signals, right? BSX is another signal, KMI, or RC. All of these are bullish signals, short term, and you can trade either stocks or options, right? You can trade either stock or options. And participate in these trades, right? You have two different strategies. You can use strategy A, where you use predicted low for the stock, right? And using weekly options. Or you can use a previous close. If the stock gaps up, let's say BSX, let's look at BSX. It gapped up this morning. If it does gap up, then you have a decision to make, right? Do you always participate when the stock gaps up, or do you wait till it enters your level? If you're not sure, you don't have an answer to that, then I would encourage you to participate in live trading room. And then you can ask these questions. You can see how I trade these signals, and then you can make your decision. If you already have your trading plan and you just need the signals, then that's where you find them, right? Active Trader, weekly, trades, options, or stocks. And same thing with weekly trade. It's a different model, but it's for longer term trading, where you hold a position maybe a week, maybe 2 weeks, right? So EWT this week, and was a long signal, so I actually traded EWT, right, based on that signal. And I was able to get in at $54, and now it's trading at $54.80, right? So almost 1.5% move in a short period of time as well. Maybe it's time to actually trim EWT as well. Yeah, pretty close. So it's trading 54.80. Okay, and I can trim a bunch of trades. Okay, so that's EWT, and these are the weekly trade, and same thing, we have monthly trader. And you have a choice. You can trade stock, or if you're more comfortable trading options, then you would go to options. And same thing, I encourage you to, especially if you knew 4 trades, 4 positions at a time, right? Not risk more than 2.5%. You can find these important notes here. Break the trade into 2, right? The idea is that if you're going to hold a position overnight, don't risk more than 1% of your portfolio, right? So if you enter the position, it goes against you at that stop level, be down only 1%, and then you can make a decision, right? Do you want to stop out because something has changed, or do you want to, maybe add, right, second entry and add to that position? So for every stock or option trades, we give you kind of both choices. Entry 1, entry 2, and then different models that you can execute. So these are the weekly models. These are the tools. We talked about stock forecast toolbox, research, right? You can look at the probability calculator or seasonal chart. Let's see. I'm not sure what's going on here. Okay, so seasonal chart, right? We can see that usually September, October, the market pulls back, but then end of October, November, this is where you have a rally, starting rally, especially during elections. This would be after elections. So, you can look at the seasonality of energy or spiders or stocks. You can look at let's see, the probability calculator. Yeah, you can look at the probability calculator. Again, same thing. Next 50 days, you could be at 586, 590. You can be at 560, 565, right? The model actually also turning a little bit bearish. And it gives you probability calculator. So that's the research. We have screeners. Different services, right? We talked about Elite Circle, where you get all of my trades, stock or options or spreads. But if this is too many trades, and let's say you're only a spread trader, okay, it's premium portfolio. If you're only a stock trader, it's robo investor. If you just want to follow this trades, it's just shadow trader. If you just want to follow spread only, then it's a spread trader. So those are the different types of tools we have in portfolios. We do have a lot of free education. We have all of the recordings, events get recorded. We have active investor workshop. You can type in, I want to learn about option, right? Or I want to learn about weekly options, right? Weekly options. So then you will get webinars, free webinars on weekly options, so you can learn. So a lot of free content. We also give you a getting started guide. There are newsletters, and every week we send a video and we set market commentary. I encourage you to also look at that. And we do have YouTube channel, right? YouTube channel where you actually can participate live, right? Can participate live in our live training room discussion. All right, any questions? If they were success. Sorry. Thank you, Karen. Yes, I will watch 666 level. Dan, I still use Tradia. Yeah, we still have a relationship with Tradia broker. I have an account there as well. Yes. TFC looks pop as a thank you. Explain why. Explain why trade. Oh, explain weekly trader, please. Sure. So weekly trader is another model, right? Just that analyzes signals that should persist for, it says 2 to 5 days, right? But 2 to 5 days and maybe beyond couple weeks, right? So it gives you same thing. It gives you this was published on Sunday, right? Active Trader gets published every day because the signals happen every day. The weekly trader gets published on Sunday. It basically says, okay, you have strategy A, enter the trade as of Friday, whatever the price was on Friday, then enter the trade, or look at our predicted low, right? Predicted low for the EWT, right? This was done on Sunday, right? So let's look at 1 hour. Sunday was what? Tuesday, Monday, right? Friday. So there was a gap actually on Monday, right? We come in, there's a gap, right? Usually I wait, 15 minutes. So at 54, right? And then you have a choice, right? You wait 15 minutes. You can look at the suggested price, 53.78, 52.27. Both prices were, it hit that target, right? So you enter the position, right? So what did I enter that? Personally, I entered at 54.02, right? I waited 15 minutes, that session, and entered at 50.02. It did pull back to 53, close to 53. Now it recovered to 54.87, and I probably want to get out of this trade. It's almost 2% in 1 week. That's a good target. That is the good target to hit. Right, and I'm out of this trade right now. But you might say, you know what? I don't have exposure to Asia, right? I don't want to. China is too volatile. I'm going to stick with, Taiwan, right? And for the entire economy to move 2% in, in a couple of days, that's good trade. But you might say, Vlad, no, it's going to 56. I'm going to stay in that trade, right? There's no right or wrong, right? This is just what does your trading plan look like? What kind of profits are you looking for? In weekly trader, we're looking for 2% profit. If you enter the 52.27, 53.32 is about $1, right? 2%. My math right? Yeah, 2%. So we're looking for 2% profit on this weekly trader. On active trader, we're looking for 1%, right? The higher return you're looking for, the smaller the probability of success, right? I talked about this all the time, right? If you are looking, let's say, Citigroup, right? If you look at the Citigroup that announces earnings next week, right? Announcing next week, right? The further, let's say you select the strike price. Let's look at the gamma exposure for Citigroup. So by next week, the expected move is 4%, right? We could be at 68 or we could be at 62, okay? Let's look at the Citigroup gamma. It's trading at 60. 70, right? So expected move is, what do we say, $4 here? 4%, $3. This is one standard deviation. So 2 standard deviations, $4. Right, so expected move is 3.5%. We know Citigroup could be volatile. It could move as much as 7%, but somewhere between $2 to $4 is expected move. Just depends on if you 2 standard or 1 standard deviation, and obviously people think 2 standard deviation because the highest gamma we do have is at 70 strike right now. So there is a lot of demand for 70 strike. So same thing, you can structure your butterfly like I did the JP Morgan today in Wells Fargo, and basically buy maybe 67.5, 70, 72.5, only 21% probability, but it's 5-to-1 payout, right? You're risking 40 cents to make $2. If you want higher probability, then you have to basically come, closer to, pick strikes closer to what the stock is trading. So you can have 50% probability, 40% probability, but then your payout is going to decrease. And that is the essence of trading, right? Is that if you're looking for triple-digit returns and high payout, your probability is decreasing, right? You cannot have high probability and high payout, high return on capital. That doesn't exist. So the higher the returns you're looking for, just realize that by distribution of outcomes, it's going to happen less often, right? Like this picture should always be, like at least in my mind, right? Distribution of outcomes. If stock is trading, if the stock price is trading here, right, or a strike, then 1 sigma move, 2 sigma move, right? There is distribution of outcomes, right? So if you're looking for, if I'm looking weekly trader 2% return, but you're looking for 4%, just realize that I'm going to be right more often than not, more often than you, right? But you will have a higher payout, because then just the question, how do you manage these positions, right? So that's kind of the important part of these tools. Bank earnings. I mean, things are obviously breaking out. Question about XLF calls. I mean, short term, I think, short term, obviously there is a volatility that could be an issue. But, assuming that this is a confirmed breakout and Bank of America and Citigroup will follow JP Morgan and Wells Fargo, then, market is going to head higher. Geopolitical risks are important risks, I agree. All right, guys, that's all I have for today. Thank you for your patience. Sorry I was a little late this morning. Because back-to-back live trading room and weekly strategy roundtable. But I'm glad you guys made it. Stay safe. My prayers going out to everybody who's affected by the multiple hurricanes. Hopefully you guys get the light back and everybody's safe. Enjoy your time with your friends and family. And I will see you on Monday. Thank you very much and have a great day. David, Don, Kevin, Denis, Eric, Jack, Kevin, Peter, Vitus, Bill, thank you very much. All right, I gotta look for SFT issues. Thank you.